Hi, everybody. Steven Sitkowski here. If you've been following me, you can tell we got some new digs. Yeah, I moved. Pretty exciting to have this cool office to work from. Happy to have you here. Welcome to this edition of Market Insights. Let's take a look at what's going on. Things have not been very tame in the financial markets. That much, I'm sure all of you know. It's been pretty remarkably here as of late. Want you to know that everything that we do here is for informational and educational purposes only and not intended as investment advice. What to watch this week? Well, today we had the services PMI number. Did not turn out as everybody hoped. Economy is definitely slowing. Tuesday, we have the trade deficit. That's not going to be a market mover. Consumer credit, not a market mover. Thursday, initial jobless claims, probably going to come in a little high. Last week, it was 248,000. We would expect something probably similar to that. Last week's heat map, brutal, red all over the place. But just to give you some perspective, this is a one-year heat map. So, NVIDIA is still up 121% for the year, Microsoft 20%, Apple 9, Alphabet 26, Lilly 21. Things have been okay for the last year. Market breadth. So now we're looking at number of new highs versus new lows. 591 new highs, 141 new lows. That's on the New York Stock Exchange. And even on the NASDAQ, 534 new highs to 429 new lows. It's a very concentrated market. We've got 35% of the S&P 500 valued based on the top 10 stocks. That is not healthy. And we are getting a huge CapEx investment in AI from the biggies, NVIDIA, Amazon, Microsoft, Apple. Yeah, they're all there represented. Investors been rotating into small cap stocks, as you can see. So you check that out. Yeah, look at all that investment. Jobless claims, they continue to mount. These are initial plus a continuing claim. So it's a 4-week average. We're at a 32-month high. New job creation, that's been backing off, as you can see here. Fed gets its wish. Core inflation, it's down to 2.6%. They were hoping at this point to be at 2.8. They were expecting unemployment to be 4%. Now it's 4.3. And Mr. Buffett has increased his cash position. So what does that tell you? A lot of fear out there. Now, when the Fed cuts, and they're going to, it's generally really good for the market. So we have that to look forward to. Markets are pricing in 3 cuts this year. They're expecting 100, let's put it in plain English, 1.18% drop. That's what they're anticipating. And the VIX has been going crazy. It's been around 15, 10 to 15. Now all of a sudden it's up at 36. Fed probabilities, there's an 89% chance of a 50 basis point cut in September. Only a 10% chance that we'll get a 25 basis point cut. And the market sentiment, extreme fear. Here's what I want all of you to know. Drawdowns, just part of the deal. I mean, if you're going to be an investor, you've got to be able to cope with the fact that we will get drawdowns. No ifs, ands, or buts. We got a bunch of earnings this week, but all the biggies really have announced. But, there could be some potential market movers in here. And this is the S&P 500 index year to date. So the S&P is now only up 8.35%, but it's still up. Communication up 16%, utilities almost 15%, technology 13%, staples 9.88%, financials 8.58%. So they have all matched or done better. Healthcare slightly behind. Industrials, energy, REITs, materials are lagging, and consumer discretionary is actually down. So let's take a look at the charts. It has been a recent bloodbath. Let's look at the SPX. So we are well below our 50-day. So right here, we were hanging in that 50-day moving average. And then there was just this big sell-off. And what was the reason for the sell-off? Well, markets are concerned we could be headed back to a recession. So everything works great until you get a recession. And if that happens, the market falls, and the market is always looking forward. So let's see what things look like intraday as I recorded this. Yeah, so things have stabilized a bit, but clearly not great. How about the Qs? Same kind of a deal. Big sell-off. So big tech has gotten hammered. And IWM, this is the Russell 2000, has fared a little better. It's not quite as far below its 50-day, but still nothing good. Well, we'll be keeping an eye on this. I really think it's going to create some opportunity. I think NVIDIA under 100 is a deal. I like the fact that Tractor Supply Company today was actually up while the markets were down. Let me see if that has held. It has. So I put trades on Tractor Supply today and NVIDIA. I've added 2 positions there. Yeah, NVIDIA at $100.03. So, all right, there you have it, my friends. I will be back with you next week. So until then, have a safe week, a blessed week, and we'll talk soon. Bye for now.